the Monday edition dynamic and welcoming of your questions, your comments. Values will be a topic today as we have one of the foremost value experts. I mean, in a 300,000 person market, I mean, your territory is what? The Commonwealth? You cover the Mid-Atlantic?
For mansions and stuff, we cover pretty much the whole Commonwealth.
I mean, this guy's covered Virginia here, so this is a sage, if you may, Keith Smith.
A sage?
Yeah.
Isn't that something you put on your meat or something, sage?
Yeah.
You can do that. That is...
It goes in the stovetop.
I was going to go with
Sage.
like the oracle of appraisals, but I'm looking forward to it. I always love having you here. I always love seeing you. And love to see you to pick apart some of the stuff Jerry and I were talking about by the end of last week. And from your perspective, see what we can do to help folks move forward or backwards or whatever they want to do.
I love it.
We're going to move either way, right?
Guys, give the show a like and a share. We're live on every social platform. If you're on LinkedIn, Twitter, YouTube, Spotify, iTunes, Fountain, anything, jump in. We welcome the commentary. J-Dubs, we can rock and roll when you're ready. Good Monday morning, guys. I'm Jerry Miller, and welcome to Real Talk with Keith Smith. Thank you kindly for joining us. It's a great Monday to connect with you through the I Love Seaville Network on a show presented by Yes Realty Partners and Keller Williams Alliance. Today is Woody Fincham, and when Woody Fincham is on set, I get very, very excited. We have an expert at values, at appraising homes, at determining where the market may or may not be going, and he is just fantastic at putting the content in approachable and very easy to understand type of communication. Judah Wickower is the director. If we can go to the studio camera and let's welcome the panel. Keith Smith, Woody on a Monday. That's our benefit on a Monday.
I think I'm just going to sit back and listen and learn.
Same, man.
When Woody's on, we get some learning in. So for the 2 or 3 people that don't know you, quickly introduce yourself and your firm, and then we can kick off from there.
Sure. Woody Fincham. I'm the president and co-founder of Fincham & Associates. We're a residential real estate valuation firm. We do consulting and feasibility analysis and basically value real estate, I guess, is the easiest way to say it. Sorry, coffee's not kicked in yet.
He values what is most Americans' primary retirement asset. That's what he does.
And why is that so important? Why is, in today's environment, your job more important than most markets that we've been in at this point? There's a couple reasons why.
It's a good question.
Why?
That's a big question. I think mainly because we are kind of like, I don't like to use the word gatekeeper, but we're the fulcrum upon which most real estate transactions kind of swing. And that we're looking at the real estate for mortgage transactions to make sure that it's vetted well, that the collateral that they're using for the loan is what it needs to be for the bank. We found out how very important appraisers were, about 13 years ago when the market decided to go belly up. And a lot of that, there were some things going on in the valuation market that caused some of that. So it's a very important profession. Sometimes I forget how big it is.
Well, it definitely is. As we refer to it, or as Neil Williamson refers to it, and I stole it, as the time of great unpleasantness, right? And so just to compare the two, what was going on then, because this question comes up quite a bit. Are we going to have a repeat of 2008, 2009, 2010? There's many reasons why I don't think it will, but I think a lot of it lands on the appraisal process. So what was the difference between that and now?
Well, I mean, ultimately, the difference between it, I think now banks and lending institutions are being more careful with their collateral. They actually want it vetted. Back 13, 14 years ago, they were just... appraising for most lenders were just, hey, it's a box we got to check to facilitate a closing. Let's make it happen as quickly as we can, as cheaply as we can, and let's not hire qualified people. I mean, that was a big problem back then. But I think, that's not putting too fine of a pen into it, I guess.
But the regulatory requirements changed quite a bit as part,
big time.
part
Big
of
time.
that, correct?
Yeah, I mean, there's most lending institutions that we work with now, I can't, as far as the transaction goes, I'm not allowed to speak with the loan officer. Anyone who's commissioned in it, except for the real estate agents, we're really not supposed to be talking to. There's nothing illegal about it, but that's the policy of a lot of lenders, because there was quite a bit of collusion going on back in that market 13, 14 years ago.
And, I want to highlight this as we wind down the first sizzle reel and end the first one with what Woody says here. Keith set the stage perfectly. Another reason this is different from the time of great unpleasantness, 08, 09 housing crash, one word, equity. I mean, people
Yes.
are sitting on stacks of paper right now, which is breeding security, which is very different with what was happening back then. Your thoughts?
Oh, for sure. I mean, the other big thing, too, is that, the markets 14 years ago were basically a lot of investors were acting like heroin addicts. It was uncontrolled gambling. They were taking a lot of mortgage-backed security paper, where they take the mortgages, they sell them on the secondary to investors, to Fannie Mae, to Freddie Mac, and they were putting together really badly graded paper and putting it in with really good paper, and it was toxic. Everything was toxic the way that they were doing. So a lot of it had to do with how they were investing in the stock market itself. It caused a lot of problems.
So we're going to talk a little. Excuse me. We're going to talk a little bit later in the show about valuations quarter over quarter. But
Right.
I want to go back to the ability to talk to my side of the table,
Sure.
the real estate agent, the realtor. Is that a benefit? Is that helping you through certain appraisal situations where you might have struggles with getting the valuation? And
Oh, for sure.
what kind of offer, what kind of service, or what kind of help do we bring to the table?
A lot. It's an invaluable communication piece. My job when I'm working on an appraisal for a mortgage company is I've got to understand the transaction. If I don't speak to the listing agent and I don't talk to the buyer's agent, I may not understand the motivation of the consumers involved. One of the things I have to do when I'm appraising for a lender is that I have to vet whether or not it's an arm's length transaction, meaning that everybody's acting in their own best interest. They're to a certain degree they're well informed, which is usually the case when you've got agents involved. They've done their best for both sides of the transaction. And it's really important for me to understand, well, give me a history of the property. That's what when I'm teaching classes for the Appraisal Institute, whenever I'm lecturing to my students, I'm like, when you're writing an appraisal report, you need to tell me the story of the property. So I want to know the transaction. What updates have been made to the property? What was your showing feedback? I mean, all of that's super important. I'm really surprised at how many appraisers actually don't have those conversations, because there's no other way for me to find it out.
Some say that they're not supposed to talk to us. That's part of the reason why I brought this
Yes.
question up. Is that legitimate, not legitimate? Do I have the ability, as I'm representing my buyer or my seller, for that matter, to communicate? I'm allowed to do that, correct?
You absolutely are allowed to do it. A lot of appraisers like to work in a bubble, and I'm not trying to pick on my colleagues, but a perfect day for most appraisers is the phone doesn't ring, you sit at your desk, and you're typing your report, so no one's bothering you.
And how often does that happen?
Never. The only way I've found to do that is to get up at 4 o'clock in the morning when everybody else is asleep and work.
Really?
But
Don't say that out loud.
But then
I
if
might
I
call you.
if I turn my iPhone on though, take it off of no do
Airplane
not
mode.
disturb.
Yeah.
People will start. It's like if somebody else is up and sees I'm up. They're like, oh, great. Can I ask you a question?
I've never done that.
So he's a busy guy. He's constantly crunching numbers. He's constantly looking at analytics and data. A follow-up to Keith's question there. If the house is paper trailed correctly with permitting, with updates, and the paper trail is well documented, why does that conversation with the agent have to happen? Can the appraiser not garner the information he or she needs from just the paper trail to properly appraise the house?
To a certain degree, you can do it just through the paper trail. But again, My job as an appraiser is I'm trying to synthesize what's going on the market. So I can't do that if I don't understand what the consumers are doing. I don't work directly with consumers when I'm doing a mortgage transaction. So, as a matter of fact, we try not to talk directly with the borrowers in most cases because it creates all kinds of issues. Not that it's illegal, it's just, it's a professional thing. Because people are always trying to bend you to what they want to do. But in the end, the only way I get that information about what consumers want, what they need, Keith, when he's driving people around in his car, he's listening to a husband and wife or a couple talk about what they want and then what they need. So market preference really comes from being able to discern that from, talking with the agents and talking with other people involved. We even talk to title company folks whenever we can.
I think a lot of it, Jerry and Woody, is that the market is moving so rapidly.
Yes.
That it's difficult to get a beat on it if you're just looking at it from the laptop perspective or from our Surface Pros here.
Yeah.
And I think that's where the conversation, and to that point, a couple of folks after our Friday show reached out to me and wanted to do breakdown of like $1 million plus, 750 to 99. So just to talk about the $1 million plus in our full footprint, which I've included Waynesboro, Stanton, and Augusta in that. And that's slide number 3, Jude, if you got a minute. If not, no worries. We have just from the end of the first quarter, thank you, Judah, from the end of the first quarter, right, just the first 7 days has jumped up 7% in value, $944,000. So it's interesting, the $1 million and up is actually one of the only price categories that had an increase in volume. It went up from roughly 6% in volume on it, which is not on the slides here. That's another slide.
You think that's a byproduct of straight up cash buyers that are not affected by rate volatility?
That's
in that category.
That's a great question because I was just about ready to X.
I would imagine that category is straight cash money, and they don't care if we have roller coaster rate rides.
Yeah, we've just done a couple of assignments where the folks were qualified to buy with cash. They ended up doing. A lot of times in those situations, they'll also get a small mortgage on the property. So we'll get called in on a sale. It's funny, you call the listing agent, hey, I need to come out and do an appraisal. Well, this is a cash deal. Why are you coming out? Well, they're doing something else with some type of lending instrument. And
what's that mean?
Well, like you can, a lot of times folks have a lot of money in their retirement account, so they'll access that to pay cash. So that way they're more competitive in the market. They don't have to worry about bidding because their mortgage limits them where they're at. Pay what they need to pay, and then as soon as they close, they cash that money back out, put it back into their retirement account.
Gotcha.
I'm working on 3 transactions that are exactly doing the same thing. They're pulling money out of retirement funds, purchasing, and then they're going to go reach out to Scott Morris to go ahead and finance a portion of it, refinance it, however the mechanism that he's going to use to help them. So that's starting to happen because in order to win the day, cash is king, right? And then what they're doing is going ahead and then taking a portion of that and refinancing it. So you're seeing some of that?
Seeing a lot of it. And the best part about it is oftentimes if they don't do it while they're purchasing, they'll do it immediately after the purchase. And so we end up with the best comp in the world we could ever have. It's the subject property itself.
Yeah, which closed, days ago?
Yeah, it's amazing how...
So you've seen a lot of that?
More than we have ever seen it, but I mean, it's not, maybe 1 out of every 20, 25 transactions we're doing are that way. But we do a tremendous amount of volume over the course of a year, so I imagine, I don't know how many. I really don't know how to quantify it, Keith. Just more than we've ever seen.
Can we go back to the chart on screen? Because this data is fantastic, Keith. Absolutely fantastic.
Yeah.
Judah's got it on screen for you boys.
And I'll let you jump in on that because I was going to ask Woody a few questions of that.
I just would love his take by category.
Yeah.
I mean, if he could just shoot from the hip and, we're sitting here at Woody's bar in his basement at his house. Give us the breakdown by category of what you're seeing on screen. We got a true professional here.
So the $1 million and up category is a very difficult category to metric because that can include all types of real estate that's above that. I mean, some of those properties are include 100 acres or more.
Serious land.
Some of them, if you get into Farmington, you might not have 100 acres, but you've got very valuable 4 acres of land. Also, the size of these properties as far as the gross living area and the amenities. A lot of these properties have equestrian elements. They're going to have large stables. Some of them even have tenant houses and farm manager houses and things like that. So that category can be a little difficult to follow.
So I'll jump in on that real quick. I actually did a dig into the data yesterday. The average acreage for the million up is 14.
Wow.
That doesn't mean some are higher, some are lower. This was average, right?
Right.
That's a nice chunk.
That's-
Yeah,
To
especially
Woody's-
for Albemarle County.
For sure.
Well,
That's
that
just-
includes everything. So
Okay, you did the entire footprint.
Still,
to include Augusta, Waynesboro, and Stanton.
Yeah.
So that's, the listeners and viewers were asking for a bigger picture, what's happening
Sure.
at the different price points.
Of course, $1 million here is a lot different than $1 million over in the valley.
right.
When you get over there, you're getting into very big pieces of land usually.
And I'm a little slow. It took me like a half a day to do this. To break it all.
Job well done, Keith
Break-
Smith.
break it.
The next category is jumbo market, possibly.
Yeah.
On the low end, not the jumbo market. If you could put it back on screen, is it 750 to?
999.99.
Yeah. So the low end of that may or may not, depending on the down payment, be jumbo.
Correct.
The high end, you're probably flirting with jumbo on the high.
Oh, sure.
Because that puts you at 800. If you put 20% down on $1 million, you're at an 800 loan, which is clear cut jumbo. What do you see category 2 there?
That is a very competitive category. I mean, like if you get into Crozet or North Point or places like that, that's a very common range for the price points for those. I mean, you're getting into a very strong upper middle class market.
Yeah.
And
that's a statement right there. $1 million, upper middle class. At one time, that was clear cut luxury. I'm seeing a lot of stuff that's 8, 9. That's nowhere near luxury.
So
nowhere near luxury.
The 3 people that reached out to me after Friday's show, hey, let's talk about the quote-unquote luxury, each one of them I said, so what's your number? Right? What are you considering?
What is luxury now?
I mean, $1.5 million and above.
Yeah, I would agree.
Think about that, ladies and gentlemen. $1.5 million above is now luxury. It used to be
Sub-million would be the big number, and that's not too long ago.
850, 900 in some cases,
Yeah, I was
right?
going to say, if you could get into the western part or the eastern part of Ivy, and you would definitely be in the 750 to 950 range.
And luxury.
Yeah.
So if you go back to slide number 3, what I found interesting about this, and I would love your feedback on it, other than the million and up to 750 to 999 to 500 to 749.9 to 250 to 499, so forth and so on through the 1, 2, 3, 4, 5 categories, all of them were pretty flat value quarter over quarter. One might be a percentage up, percentage down. The million and up was substantially higher. But when we go to the next slide, which I believe is 4, that's I think where the real story is the volume of sales. So to your point, Jerry, thank you, Judah. The 750 to 99999999999 had a 57% drop in transactions.
Inventory.
A number of actual closed transactions, quarter over quarter, was down 57%. The highest, by the way, was from 0 to 2.4.
You know why I think that is? I'm just spitballing with you boys here. I fall in that category right there. And we got something right before COVID. And if folks got it right before COVID and locked that rate in, how can they potentially move? Because their trade up is now, as Woody just identified, $1.2 million, $1.3 million, $1.4 million, $1.5 million.
And how do you get that?
Plus the higher rate.
Yeah.
So they're like, why? I would hold. You would hold. I mean, do you guys disagree here? Because the folks that are trading up from that category are going into the million up category.
So
And
I'm
the
only
million
going,
up.
I'm only going back to last year. But that's the point I'm trying to make, is some of these more middle grade price ranges I think had greater appreciation, and this is what I wanted to ask Judy.
Woody.
Thank you. That's Judy.
Judy, wow.
Judy. So have you seen in the last 5 years the appreciation of million and up substantial? Which price category, in your opinion, had the largest jump in the last 5 years?
Lower middle class to middle class probably had the largest jump percentage-wise.
In value.
Yeah, I mean, just taking my home as an example, we bought a 4-bedroom, 2.5 in Lake Monticello in 17 for $230,000. The value of our property is over $400,000 now.
Yeah, sure.
I mean, that's an amazing amount of growth. And we're still getting people. I mean, I get occasional knocks on the doors from agents that can't find what they want. Someone wants a colonial. Hey, we want to buy your home. It's like, no, I'm at less than 3% on my note. I've got a massive amount of equity in my property, and no, I just don't.
Until a life change happens.
Yeah.
Well, his take on that phenomenon, because that's been covering well over the last 2 weeks. How do we uncover that? How do we get over the phenomenon of you sitting on significant equity, but it's significant equity at a rate that's sub 4, sub 3, sub 275, and you saying, I'm not going to utilize the equity to trade up, which would add inventory. And I'm not talking to you specifically,
Sure.
I'm talking generally. How do we get over that?
Time. I mean, people eventually are going to want to move. I mean, that's the American dream. We buy, and then a few years later we're going to move up, and I think that's not going to change unless we see a significant change in how houses are being bought. And like going back to my situation, my son moved to Chesterfield. I have 2 grandchildren there that I want to see way more than I'm getting to see right now. We won't move to anywhere close to them, but had they been a little closer, we probably would have sold and moved, just so we can be. But Chesterfield's just too far away from my base here in Charlottesville. But things like that occur in everyone's life. You want to move closer to work. You want to, eventually you just want a bigger home, because as the old George Carlin joke, we need bigger houses because we got too much stuff. As
We
acquire
got
things,
stuff,
we
don't
need
we?
a bigger home.
Woody Fincham with the Carlin joke. Judah even got a chuckle out of that one right there. That's the first reference of George Carlin in the I Love CVille network history. That was amazing.
Don't go there, because I think Woody and I could do some George Carlin riffs on.
I thought it was fantastic.
Yeah, when you're 9 years old and you get into your father's AM/FM album for George Carlin, which I got my hide tanned over that one. But
Woody Fincham, not only a value expert, but some would say a heavy metal aficionado as well. Woody Fincham, I think that's fair to say.
I was thinking about Woody on a bike ride the other day.
I think that's absolutely fair. So what do you say to the folks that are going to see the CAR report? And Keith's gotten ahead of this. I'm sure you've heard it on his show. CAR report coming out where potential values have dropped year over year.
Well, when Keith put his numbers out last week, over the weekend, I'm thinking, I'm going to prove him wrong.
Oh.
But I can't.
Okay.
Because the one thing, once you get below the $1 million mark, when you're trending data, it's often better to use a point of comparison, such as price per square foot, something of that. And I hate price per square foot when you're valuing.
Oh, yeah.
Oftentimes agents will misuse it, and consumers misuse it because they don't understand how it works. But when we're trending data, we will use price per square foot. We use median price per square foot usually. And I couldn't disprove what he was showing just in his absolute sales price numbers.
And I wanted you to.
We're showing a slower decline,
Yeah.
like 0.03% per month is what we're showing overall in Albemarle.
But it's only in certain jurisdictions, right?
Right.
So, Jude, if you can go to slide number 1 with that $400,000 green line that I have set up, all the other jurisdictions, with the exception of Buckingham, are either flat or just a little bit above. It's Charlottesville and Albemarle that kind of took a bit of a dip. But if you take a look at what happened in the last 7 days, it is completely reversed. We are now higher than we were by the end of the first quarter. And any read on why you think that was happening during that first quarter?
Well, with statistics, when you're trending, the one thing that will affect it is frequency of occurrence, right? So, and what I mean by that is how often is something actually selling. We went through a lull. When August hit and the rates went into the 6% range, buying power just evaporated for a lot of folks, or diminished what they could buy by quite a bit. So a lot of people were just like, I'm going to sit on the fence. We're not going to do anything. So what happened? We slowed down in frequency of sales. If you're trending with a trend line, what's going to happen is that's going to actually pull that trend line down because you don't have as many occurrences of the data as you had previously. Sorry to get all
No, this is
mathy.
fantastic. Please keep going. I love this stuff.
And we will often use a polynomial line where we'll do 4 movements in it, and what that means is that the line actually moves kind of as the bars progress. And the few that I ran over the weekend for Albemarle shows that it's just starting to turn and tick back up because frequency's increasing.
I would agree.
So I think over the next month we really are going to see what the market's going to do. I have no reason to think we're not going to have a positive market
Overall. And
At
that's,
close of business 2023.
I think so.
yeah, I'm
Positive market values. Obviously not
so.
units sold.
No.
No, no. I mean,
Value, total dollar.
people that were going to make a move have done it. So, I mean, now we're getting back to a more normal market where people are moving because they need to move. They're not doing it just because they want to move up.
Well said. Very well said. You agree with that?
I totally agree with that, and I think, and that's the reason on Monday's show I was a little hesitant to talk about this, but I think we needed to do that. We needed to get this information out there, and evidenced by the few texts that I
By the
received
responses, yeah.
on that end of it. But and the reason I wanted you here today, or asked you to be here today, I should say, is I wanted to see your read on it. Is this just a blip where I'm reading it, and it's kind of a hangover a little bit from the interest rates going up, the holiday season?
Sure.
And I can tell you right now what I'm seeing in Charlottesville, Albemarle. I'm going to go do a home inspection this afternoon in and around by the airport. Cash buyer, multiple offers. We were fortunate enough to win it, and that all happened in the last 7 days on it. So I think you're right. I think at the end of the year, I'm still sticking with this 3 to 6% year over year as a minimum. Some of it I think might be a little bit higher, but the thing that's scaring me as a practitioner is the units are dropping, number of sales. And we've talked about this, Jerry and I talked about this months and months ago when the 3% was happening. And I think that is going to be more detrimental to the market long term than, I'm talking about the ability for folks to buy or wanting to sell. I mean, am I off base or you?
I mean,
He's basically saying if you have a 3% interest on a 30-year fixed mortgage and you secured this during COVID, before COVID, whenever, why would you sell your house? And why would you, activity breeds activity, put your house in the rotation to create other houses coming in the rotation? That's what he's asking, Woody.
yeah, I mean, I'm glad to see that it's slowing some because it means we're moving back to pragmatic consumers. I mean, this fervor we've had the last couple of years, I mean, there were some general conversations when I would talk to other appraisers across the country. I've got a big network of colleagues that I talk with, and some of them were actually to the point: are all these transactions actually arm's length transactions? Because the people are buying out of the fervor of bidding. They're getting competitive. Do they really need to do what they're doing? But in the end, I think it's a good thing for the economy overall that we're slowing down. It's not good for our colleagues that need to close loans to make a living, but
Devil's advocate on that comment. Folks are still making purchases, and Creighton Cross is watching. He says you're an absolute legend. Creighton Cross is giving you props right now. Other folks are saying similar things. I'll read their names here in a matter of moments. Devil's advocate, the home inspection waivers are still happening.
Yes.
Appraisal gap coverage is still happening. I still see psychotic, different phrase, I shouldn't say that. I should say rash decision-making based on a competitive landscape is happening still. Is that fair? I think that's fair.
It is.
Yeah. If you waive a home inspection, I would say that's rash decision-making based on a competitive landscape.
So and Woody was kind enough to help my daughter and son-in-law and myself take a look at a valuation on a piece of property, which was 8 properties ago.
Right.
We made offer on. So we made an offer.
You're offer 12?
This is 11 on the
Okay,
table.
11, gotcha.
And I think we've got a really good chance of getting it because we waived home inspection. And
What year is that house? No, seriously.
Yeah, double my age.
Okay,
It's 100 years old.
and you're waiving the home inspection. I mean, that puts a lot of pressure on the realtor who's a father who has a Class A contractor's license. You have a boatload of responsibility on your shoulders right now.
Exactly, and I do. But
Boatload.
But that responsibility is there regardless if it's my daughter or not. Right?
Yeah, but now without a third-party inspection.
Well, but this is part of the conversation. And I spent an hour, which, by the way, I've got other clients that are wanting to waive home inspections. And we have this long conversation of saying, okay, this is the upside, this is the downside, right? The upside is, the moment, it puts us in a better position to win. The downside is we don't know. The worst part of that Richmond the one that we're on, they're only giving you 30 minutes in a house. That's it. That's all you get is 30
That's bananas, man.
And 30 minutes after the show on Friday, in the rain, looking at a house,
And then you put an offer on it.
and then trying to mentor and coach the buyer
You hear that,
through
Gina?
the decision process is a ton. Thank you. You know what? I just do it, but I
That's
never really.
tremendous responsibility.
I just do it. I never really thought about it until you just.
Well, on top of that, for the viewers and listeners watching, this is his daughter who has a 2-month-old baby that is moving.
turned 3 months on the
3-month-old
7th.
baby who's moving across the country to a new market for a new job that her husband's taking.
But
And this is their first house they've ever purchased in their entire life.
I'm trying to go back a little bit as Jerry is talking to the NAR year over year reasons for folks to move, and I'm trying to find it out of 170 pages here. Back to the reasons. What primary reason for selling a previous home? Wanted to move closer to family or friends. 21%. Moving due to retirements. Number 2, neighborhood has become less desirable. Number 3, house is not too small. Number 4, change of family situation. Number 5, home too large. That doesn't make sense. One's too big, one's too small. It's kind of like too hot, too cold. Job relocation. Don't know if I'd like that. I'm reading this for the first time, by the way. Upkeep a home is too difficult. Cannot afford mortgage or other expenses. That doesn't make sense. Move closer to current job, unfit living conditions, yada, yada, yada. There's like 12 reasons here. Number 1, move closer to family and friends. Number 2, retirement. And that's why people are moving right now.
Right.
Closer to family, retirement, neighborhood has become less desirable. I don't understand number 3, but it's number 3 on that end of it. But it's a nationwide numbers. But, you know, for the realtors that are out there watching and listening, this is why I'm trying, as far as home inspection goes, the house hack is try to bring a home inspector with you.
Or a contractor.
Or a contractor. But if you only got 30 minutes,
What can you do?
there's not much you can do.
So legitimate, and then Woody, you jump in here anytime you want. I'm just trying to understand here. Friday after the show, you went with your daughter.
No. She's in Seattle. This was FaceTime.
Oh my God.
It's even
Did
worse.
you hear that?
We
Woody?
did this. We did
You went to Richmond,
Yeah.
did a 30-minute FaceTime tour
Yep.
of a 100-year-old home.
Yep.
And put an offer on a house
Yep.
that your buyer is your daughter,
Yep.
that has a 3-month-old daughter,
Yep.
sight unseen,
Yep.
without a home inspection.
Yep. Oh, by the way, an appraisal gap up to $75,000 because the home won't appraise.
Right.
I can assure you it will not appraise.
That sounds like what is that? That's
And they're happy.
Do what you got to do. Hey,
And they're
props to you.
And
Props.
they're happy. They really are. So I
Props. Yeah.
I communicate with my daughter just like I would any first-time buyer or any buyer, period, or seller, right? I would outline the possible hiccups. Like, we got to understand this, right? So I'm a little bit more educated on the housing side than maybe most. I can look at an HVAC system, immediately know how old it is, right? What the SEER rating is, yada, yada, yada. Which, by the way, HVAC system on this house is 5 years past its lifespan. 5 year past.
How's the roof?
A roof's in good shape.
Okay.
Slate roof, so we're good
Okay.
with that. But, you know, I mean, I walked through it. The mechanics look pretty good. You know, I can get an eyeball on it and pretty quickly determine it, but I couldn't get up in the attic. I couldn't get into crawl space. So I don't know if we got mold or, God forbid, or whatever. So, you know, and we spent an hour on the phone, FaceTime or Zoom, whatever we did. It's FaceTime, I think. And say, okay, I need you to understand the risk we're taking here.
Yeah.
Because we don't have any get out of jail free cards.
You guys are in a different situation because of your background. I mean, you're gonna.
You mean I'm special?
Yeah, I mean, you've got the Class A, you've got the realtor background. You've been doing this, you know, for a long time.
Experience.
You know what you're looking at. You're not going to put your daughter in danger.
I'm not going to put any buyer.
Yeah, you're not going to put any consumer into danger. I mean, I know you well enough to know that, but. You know, the old adage is that when you start taking your fundamental classes, it's like buyer beware. That's what they always say. How can a buyer beware in a market where you can't have it appraised?
They can't.
And you can't get it inspected.
Well, you can get it appraised. You just got to pay the difference.
Well, I get it.
And I don't. So to quantify this, these are very specific neighborhoods in Richmond.
But Fannie Mae has just released.
They want West Side Richmond.
Fannie Mae's actually got.
We moved out of that now just to be able to. Excuse me to interrupt you, Woody. I apologize. We're outside of that, closer to us, just on the edge of that.
What, more toward Shore Pump?
Correct.
Wow.
In a neighborhood called Belvedere. It's right off of 64. I apologize.
Claire All France is giving you props.
Oh, Claire, awesome. Thank you.
Yeah.
Fannie Mae has just announced their value acceptance program, and what that is appraisal waivers. If you're well qualified, you got a decent amount of down payment you're putting into it, they're like, hey, guess what, consumer? You don't need an appraisal.
Talk
We don't
about
care.
that for a second. What is that number? Do we know? Is it by neighborhood? or-
No, it's honestly, it's a very small percentage of people, but if this program's successful, they're going to roll it into more risky waters. I've got a real problem with a GSE, a government-sponsored entity that is in conservatorship right now, making these reckless
There's a whole show in
problems. Yeah, I mean, we're talking about leading ourselves into a situation.
that. Does that sound a little familiar?
Oh yeah. Let's not do.
So
our
the
diligence.
government's going to potentially do what the private sector did in 2008, 2009, 2010. Is that what I'm hearing?
Yeah, I mean, and when they're in the cases where they want a property inspection, they're going to hire an Uber driver with no background to go out and take pictures of a property they may or may not be well trained to do.
No way.
I kid you not.
That's just scary.
Yeah.
So to make that even worse, to go back to that, they're burning all the cash that they've saved.
Well, they're in an appreciating market right now, and we're not on the ledge the way we were 14 years ago as an economy.
So I did for this is what I would do for any buyer.
You're saying because of the down payment, they're burning all the cash that they have saved.
Well, if the appraisal
Oh.
gap gets exercised,
How many offers do we know? And you have the permit.
let me put it this way: when I showed up, there was somebody still in the house. So I walked on the outside of the house. 5 minutes before my time was up, somebody was knocking on the door to come in. So there will be multiple offers on this particular home, and that rubber band in Richmond market is growing. Here, we talked about on Friday, I think the Buckingham, I don't even want to use this, but it's coming to my mind. I think the Buckingham bubble's kind of popped a little bit. I think that valuation is plummeting. I think those who went out to Buckingham last year or the year before, they're
underwater.
They're gonna have to stay in the game.
They're underwater.
Way longer than anybody else. Everybody else, their appreciations are gonna, 5 years from now, I think their appreciations, and correct me if I'm wrong, are gonna be such that if they got to make a move of some sort, they'll have enough appreciation there to do something with it.
Why not consider just playing sake of a talk show here? I know this is a real estate buying, selling real estate. Why not in this scenario consider a year of renting?
So
And then before buying.
So we actually had that conversation. Thank
And
you.
let the market stop getting crazy.
Yeah, except that they're gonna burn through about $30,000 to $40,000 of that cash.
Because of renting?
Because that's what the rent's gonna cost.
Right,
for
but
12
they
months.
also got a high earner for a husband.
I'm just looking at the picture that we are right now. So they would do that, and what's going to happen in the markets they want to be. I can tell you, this house that we're gonna hopefully win on that.
Is this for Micah? What is this?
Yeah, this is for Micah. This
Is
is
this
wood.
fake
The
wood here?
The edge is wood. That's to let you
There's
know.
only one legit, authentic, genuine Woody in this house, and he's sitting here with a black shirt on. Woody Fincham,
Nobody
ladies and
hit me
gentlemen.
loose.
Is our
How
man
many
Woody
times have you ever
Fincham.
heard that joke?
This conference table is as fake wood as it gets, but it looks good.
Here's your and jump in and correct me if I'm wrong.
Sure.
It's not that market. It's Fulvana. It's green, right? You're chasing an ever increasing valuation, right? So you got to get in and start being part of the game. So if you're paying rent, and this is the conversation we had, okay, you're going to burn through your money. What you can afford today, like the price point that you're looking at today, is going to be higher a year from now. You've just burned your cash, so why don't you let your cash work for you now and get in the home? And this particular buyer made that decision. 2 or 3 other buyers that I'm working on are making the same decision. They're going to stay in the game.
What do you think, Woody?
I mean, Keith's not saying anything wrong. I mean, I'm a little more pragmatic in the way I look at, like, if I was in that situation, I may want to rent for a little while. But the other caveat to that is rent's not going down.
No.
So, I mean, we have a shortage of rental units on the market here locally, and, you know,
We talked about this on last week's show. Lori Fincham, one of the fantastic partners of Fincham and Associates, watching the program as we speak. She says
Lori, you're a rock star.
On top of the economical changes, you're seeing typical seasonal changes. People don't want to move their kids during school year.
Sure.
It'll peak again just before summer. Legit comment right there from one of the associates at Fincham and Associates. We talked about a Pantops 1-bedroom, brand new, Centera behind the hospital. No walkability, zero walkability, no nightlife. Brand new 1-bedroom, 1-bath, $1,700 a month.
Mm-hmm.
$1,700 a month for a 1-bedroom, 1-bath in Albemarle County. 1 bedroom.
So
one
back
bath.
to my point is you're constantly chasing.
Yeah.
You know, it's just only going to ratchet up your rent expenses, your purchase expenses. You know, I happen to think interest rates are going to drop down, so that'd be the one balance. That,
interest rate come down.
Yeah.
Potentially rates are going to come down. Potentially more inventory on the market, and what I see is the most straightforward. You're not doing a West Coast to East Coast move while trying to buy a house. You can spend a year renting while you get to know the market.
So the buyer profile that I am seeing doing a lot of that is the folks that sold their house up in Northern Virginia, New York,
Renting.
got a boat full of cash, right? Okay with burning 20, 30, 40, or 30, however it is, grand a year while they're waiting for the right house, the right features, the right condition to hit. That's what you're seeing. And then they're jumping in with a pot full of cash. And then that's the reason why when you take a look at the generational reports from 2022, the number one buyer profile is me, right? We've surpassed the millennial buyers, number of buyers in the marketplace.
How about John Keefe? Thank you. He says, love watching the webcasts. They are fantastic, always great, all the time. Jonathan says, bring up your point to Woody, Jerry, about in Albemarle County, the entry point for a first-time home buyer is now $235,000. I made the point with the villas, the 235, 3-bedroom, 2-bath. You buying that?
With the villas, is that a HUD approved? Because that's a condo, right?
Yes,
Yeah.
sir.
Is it HUD approved?
I don't. He would know more about that.
Yeah, I do not think they are.
If they're not HUD approved, that's not entry point at all. That is investor market all day. And what I mean by that is that
And that's a Scott question, really.
FHA and Fannie and Freddie will not lend in a condo association where there's not a majority of owner-occupied units. If they're mostly
It's
investor
not HUD
units.
approved.
What's that?
It's not HUD approved.
Yeah, so I wouldn't even consider that to be entry level.
The question he's asking is mainly the price point.
That's
What's the price point for first time in Albemarle?
I mean, it's got to be over 300 at this point, isn't it?
What do you think?
Well, I'm going to tell you here in a minute while you guys talk
You
for
can
a
get
second.
condo inventory in the 2s.
But again, is it HUD approved? If it's not HUD approved, you're not going to be able to get a normal mortgage on it.
So,
I think
so
Hessian Hills has got those in the 2s.
The best way to explain that is, and if you don't mind, is drop the HUD question. Is it majority controlled by investors
Sure.
or not? So typically, if a condo association is controlled by 51% or more, you're not getting a loan.
Right.
So one would think if it's on the market and it would have to say somewhere, I'm going to try to look up here real quick, we have to say somewhere in the listing that, you know, it's approved or not,
Right.
not approved. So Albemarle County, what are we considering affordable? What price point? Pick.
I just want to know what the entry price point.
Right now, there's one for 200, jumps up to 234.
Where's the 200?
200 is 5360 Lackey Lane.
That's in Albemarle?
I only did Albemarle. I did condos attached.
You might get
and
some
detached.
single families down in the Esmont area. There's some
And the high 2s,
yeah,
mid 2s?
but they're not going to be real desirable.
They're going to need
properties.
TLC.
Yeah.
Yeah.
So condos, I just took out everything else. That was an attached product, by the way. Just to talk about Albemarle County, active on the market right now. Hang on one second. Let's make sure that I don't have new. So we're good. Is cheapest one is for $375.
Yeah.
Where's that?
Glenwood Station. Been on the market for 80 days.
Something's wrong with it.
Yeah. So and it dropped from 415 to 375.
Yeah.
So if you're cracking first-time home buyer, you're looking for a first-time price point, you're high twos. And it's a diamond in the rough.
So-
It's going
so
to need
it's-
TLC.
So it's not a condo. We just proved that in Albemarle County now. Attached product, and I'm including new construction just for the heck of it. It's thinking.
Attached product's going to be more expensive. Or new construction is going to be more expensive.
Got it, but I just threw everything in there. Lowest is 234. That's in Branchlands.
Branchlands?
Been on the market for 20 days.
So there you go. Here's the conundrum. You got new construction, for rent, 1 bedroom, 1 bath, $1,700 a month. You need first month's rent, last month's rent, and security deposit. You're talking $5,100 there. That used to be a down payment for a first-time home before COVID. Now $5,100 is getting you a 1 bedroom, 1 bath for rent in Albemarle County. You can't get anything under 3, you're saying.
Cheapest new construction attached product is Stanley Martin Homes at Pleasant Green at $359.9. Nice unit, by the way.
That's a bit of cash.
I know, but it's actually well. Look, I'm looking at you did I asked you a question before the show started. You do the work for the land trust, right?
Yeah.
3-bedroom, 2-bath, Avon Park. We've just closed one last week. The market value was $395, and we sold it for $225 because of the model that we use. The buyer.
We should explain that, though. When we are doing an appraisal for the community land trust, we're appraising it hypothetically as if it's fee simple.
Sure.
The real market value of the property is the leasehold value of it.
Correct.
Because that's where the borrower owns just the improvements and they're leasing back the land.
But market value based on this
Yeah.
is just shy of 400
Yeah.
grand.
That's amazing.
Well, they get a bunch of equity built into it. We love it. So as far as attached product, cheapest you can get is $260. Anybody want to take a look at detached?
Tell me.
Let's see. It's thinking. There's a lot on the market. There's 122 in Albemarle County. That's a big number. There's one for 190. But yeah, that's a tear down.
190 where?
Blah, 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 blah. I'd have to look at it. Doesn't even give me an address here. That's that, oh yeah. That's that Lackey Lane in Coesville. If you look, yeah. Yeah. We'll move on to a different unit than that.
Someone who's trying to get in here, I mean, where are they going, Woody?
I mean, honestly, if you're a first-time home buyer, you're going to have to look away from Albemarle. You're going to have to get out into Louisa, Orange County.
You're telling us to stay away. Keith is from Buckingham because it looks like the values are dropping there.
I mean, it's an easy
Maybe that's
drive.
the opportunity?
Yeah, it's an easy drive up Route 20. It's not that difficult of a thing to come up. Buckingham's a weird market, though, because you have 5 MLSs that participate there. So you've got all kinds of stuff always going on.
It's a hard one to throw into the analysis because we only cut like a little section of it, which is over by Scottsville on that end of it. Cheapest one in Buckingham right now is 200 grand. It's on Handley Lane.
Todd Rath makes the point, and he's an investor. He owns Blue Toad Hard Cider. Good spot to find an entry market is to see where Ryan Holmes is starting to build.
That's a good point.
Now, Ryan Holmes seems to me going to the other side of the mountain and not building on this side of the mountain much. Where is Ryan Holmes cracking ground anywhere in Central Virginia?
That I don't know, but I know
over the mountain.
Yeah, I think Ryan Holmes is Shenandoah Valley now.
But Greene County is the next new construction hub. Actually got a meeting after this.
Greene's not affordable, though.
Right.
No, well, I just pulled up Greene. Cheapest home in Greene is $259.9. Then it jumps right up to $295.
I mean, Ryan does several different levels. They have their premium, I forget what they call it, but then there's their entry level, like what they were
Ryan's
building.
premium is Envy Homes.
Right? But when they were building in Grottoes, they were doing that lower level. Grottoes is just a small rural agrarian market, and they sold those things out, as soon as they put them up.
So, we can speak to Stanley Martin Homes. That they're one of our wonderful sponsors, and I know of them pretty well when they're working at it. The problem is they can't build starter homes because the development costs are so expensive.
Yeah.
The land acquisition is so expensive unless that there is some help from the government. We were talking about that with Mr. Payne here. So let's take a look at Augusta County real quick. And
while you're looking, Keith, I'll ask the question: does Albemarle give an incentive to these developers for the community land trust?
Oh boy. So I just had a meeting with Ned Galloway on Thursday at the Planning District Commission, so I have to check my notes, but they are finally releasing, I think at the next, and if Neil Williamson is watching, he'll definitely
He has a question for you.
He'll give us the date, but they're finally supposedly presenting to the public and to the board their development incentive programs for their affordable housing program. For that,
Is it going to look like they're going to allow more density for the builder? Or?
So that's a great question. It's not a very transparent process up until this point. So it's on my calendar. I just can't remember the date.
Wait a minute. Something that's happening in the public sector is not transparent? That seems strange.
Well, let me put it this way. I attended a board meeting that it was supposed to be talked about, and it didn't get talked about. So let's see how this one goes. But the theory, at least I understand it, and Neil will chime in. By the way, Neil, I'm going to be in Greene County after this meeting, chatting with Mr. Jim Friedel. Looking forward to it. I think you'll start seeing bonus incentives for affordable housing, so forth and so on. But we'll see. Maybe they're going to give sewer and water sewer tap fee discounts,
in Virginia
which
Beach,
is substantial, by the way.
And this is over a decade ago, because we've been up here a decade now. But when I was still practicing in that area, Virginia Beach was allowing like a 10% density bump if you were going to put some of the affordable housing units in, and they gave incentives for teachers and police officers and firefighters.
That's fantastic.
We won't.
That's great.
I can assure you, after it gets dropped, and hopefully we will talk about it on the show. But at the moment, unless Neil has some information that I don't have, we don't know what it's going to be yet.
Neil has a question for you specifically, Keith. If housing affordability, he says,
Thank you,
is defined as 30% of your income, what price could someone pay making 100% of annual median income, which is $111,200
So,
in Albemarle County?
Neil, thank you for the question.
It's that much.
I can't do the math on that, but I can tell you, I know for a fact, at 80% AMI, it's 225. Because as the chairman of the land trust, at which Woody helped us sell some homes for him, at 225, you've got to be 80% AMI to go ahead and make that happen. My suspicion is you're probably closer to the 250 to 275. But the real part of that question is, how many people really are only doing 30%? Most of the folks are doing way north of that.
Yeah.
More like 50% to get there. That's the real question. But look, I think I'm in Greene County. No, I'm in Augusta County. Augusta County, south of 235, there's only 8 homes available for sale. 7 homes for sale, south of 225.
Kevin Yancey says this about Waynesboro. We're having the first public meeting on tax equalization tonight. The amounts floating around range from a 20 cent per 100 to 12 cent minimum. So there's a delta, and Waynesboro's having the conversations the city of Charlottesville's having on the tax rate and how that truly can impact affordability. Charlottesville City, we're seeing it have a tremendous impact on gentrification. Grayson jumping in the mix, North Downtown's finest, says, Jerry, ask Woody's take on upzoning in Charlottesville City.
Upzoning's got to happen. I mean, we don't have but so much land here that we can deal with. I mean, air rights, I think, are going to become a thing. Of course, that's the other problem is that we're in a Jeffersonian overlay. They don't want to do but so much modern-looking stuff around. I mean, when I came to the assessor's office back in 2013, I remember we had lost Home Depot over to Waynesboro and Cracker Barrel because it didn't meet the architectural desires of the county.
It was signage issues.
Yeah, and it's just like, come on. I mean, you can't expect a corporation like that to not do what they do. So, I mean, air rights have got to come into play at some point, because if you can only get so dense horizontally.
Explain air rights real quick.
So building vertically, I mean, we need to start going up. I don't think there's any way around that. If you're going to stay in the city, As you get out into the suburban concentric circles, as you move out into Albemarle, of course, we've still got room for horizontal growth, but the land's still super expensive. That's the problem.
Neil Williamson will know these numbers exactly. So I'm just recalling the FLUM and all the ordinances that are written, the modules 1 and 2 that have been released. Majority of what is happening in this zoning rewrite is more in the single-family detached, the low-rise, taking a majority of the land that is zoned R1S or R1 residential, and you can put maybe 3 or 4 units on there. They're not allowed to go too high on that. So the corridors that are allowed to do that is pretty minimal on it. So I don't think you're going to see a huge, my personal opinion, I don't think you're going to see a huge impact on that. It'll impact those areas for sure, but I just don't think you're going to take 50,000 rooftop or person city and times it by 3 or 4 or 5. It's just not going to happen.
We're taking small changes, and that's the problem with government most of the time. They're very short-sighted, and if they're going to change anything, they do it very incrementally. They don't look at let's look 30 or 40 years down the line. There is no way in 40 years if Charlottesville as an MSA continues to grow, that we don't start going vertical, because there's only so much space.
So what do you think about growing the growth area for Albemarle County?
I think you need to.
Yeah. I don't.
This is the political capital to do it.
Yeah, I don't think so. I really don't think so.
The other problem you have to run into as well is, as you get out into the county, there's a lot of conservation easements. Albemarle is now the most conserved county in the Commonwealth, with Loudoun following just behind them. Loudoun was for a long time, and Albemarle was second. But you can't take private land to develop for private use.
So what you're saying is a large percentage of Albemarle County is put in these permanent conservations, which means they cannot be developed.
Right.
So that even puts more of a restriction on the growth area.
It does.
Puts more restriction on the inventory, which keeps it down. Our 3% is keeping it down. I'm going to throw this at you. Is this going to be this way for 1 year, 5? When?
Yes.
When is?
Yes. All the above.
Yeah.
Okay. So the Mets are doing real good
Decade.
so far.
I don't see it changing anything.
Yeah. No. So the next module release.
Does upzoning create affordability, Woody?
I think in the long term it does, but it also depends on how we go about it. If we're just going to, just piece this stuff out very slowly and allow it to happen in a slow fashion, it continues to restrict the market. Finite supply creates higher demand creates higher prices. It's basic economics. If we don't allow faster and more abundant availability of things to develop, then Charlottesville is going to remain and I love Charlottesville. What I'm about to say is not a negative, but we're going to continue to be a bougie real estate market, and that prices affordability right out the window.
Okay, devil's advocate. Is that bad for Charlottesville, Central Virginia, and the local economy? A bougie real estate market where homeowners have tremendous equity and can grow to expect and appreciate 6 to 10% of appreciation a year. What's the bad of that?
There's positives and negatives with any scenario we cut it at, but here's the reality. We have to focus on our service workers that need to be here to make, things have to function. We have to have police officers, we have to have teachers, we have to have people that are working in service retail jobs. If they can't afford to live in the community, they have to live somewhere else. We're not going to keep them on the long term. They're going to go someplace else because after a while, $3.50 for a gallon of gas, and you're having to drive over the mountain or drive from Goochland to work here. That hits an affordable household's pocketbook a lot harder than it does anyone else's.
And I think from a service perspective, because these particular service folks that take care of us are going to probably start looking to different areas, and
or what happens, which we've been saying, is the service industry, and you had to choose your words carefully here. The service industry, which is oversaturated right now with restaurants, gets less restaurants, and because it gets less restaurants, because they can't staff it, and the price points at the restaurants that survive are going to be more expensive because they have to accommodate the more expensive labor that's struggling to afford to live here.
And the term you used was what? Bougie?
Yeah.
Bougie?
Yeah.
Those particular bougie buyers, did I say that right? It's going to start. Their patients are going to start getting thin when they can't get into their restaurants, and then that's going
Well, then what happens then? The area just expands, but we already said it can't expand.
Well, it doesn't, and this pressure just keeps on. It becomes this pressure cooker, and just keeps on doing it. Just to put it into perspective, quarter over quarter, right? So this last quarter in 23 versus 22, 0. This is all the area that we're including include the other side of the mountain. Single family detached includes new construction, by the way. 0 to 249,999. The valuation was flat, actually. The median was 200 for both quarters. The freaking inventory dropped 84%. So the number of units that sold was 84%. Went from 124 in this quarter versus 228 in last quarter. It's 104 less units was sold. So, and this includes Stanton or Staunton, Waynesboro, Augusta. I do not have Buckingham in this. Louisa, Nelson, Greene, Fluvanna, this whole big circumference of area were flat on valuation, but down by 84%. So even in that ring, which includes the other side of the mountain, where are you going to buy? And we're just looking at it. There's nothing there. And I know we're doing Captain Obvious, which I'm wearing the socks, by the way.
Oh,
I'm wearing the
very nice. He literally has Captain Obvious socks
on it. That's why this Seville plans together, I think, is so important. The missing middle is so important that we can start upticking what we can within this footprint instead of growing the footprint.
Miles Hamrick giving Fincham some props over here.
Brother Miles.
Welcome to the program. Thank you kindly for watching. The follow-up is from Spencer saying, Jerry, bring up the point that you make often with Woody about HOA neighborhoods in the city and how they could increase in value as they are protected from upzoning.
Well, I mean, those are your covenants and restrictions that are in the HOA. I'll get out of the city for a minute and just go back to Lake Monticello. I know that market really well because I live there. You can only do what those HOA rules will allow you to do. I mean, so there's not going to be any change in that unless the board overwhelmingly votes to change things. And
that's difficult.
My experience in 25 years of doing this is HOA boards very rarely change anything.
Yeah. Other than raise the dues.
Well, yeah. They're very agreeable to that.
So it's interesting, Jerry, you should bring that up. At our Easter dinner meeting last night, James Watson, who's my brother-in-law, who's also
Love you, James Watson.
A planner by trade, we were having this very conversation about HOAs in Lachlan Hill.
Oh, James is watching.
So half of Lachlan Hill is in Albemarle, and the other half is in the city of Charlottesville. And I believe, well, I'll leave it alone, but we were having a discussion about the half that is in the city of Charlottesville.
Do you know what other, this is a trivia question. In fact, we should save this for the I Love Seville show. James Watson, you cannot answer on the I Love Seville show. Name 2 neighborhoods in the city of Charlottesville who has half the neighborhood also in Albemarle County.
Gosh, I should know this.
Yeah, Lachlan Hill is one.
Yeah, that I know for sure. I'm trying to think of the other one.
You should know this too, Keith.
Yeah, Huntley? Is it Huntley? No.
Huntley's behind Dirty Nellies and JPA.
No, what's
You're
the
getting
one?
Huntley confused. See, I'm speaking Keith right now,
Yeah,
but I'm
yeah.
not going to give the answer.
Yeah,
I know you got the answer. It's on the tip of your tongue.
It's the one on 5th Street extended.
There it is.
Yeah, I just can't remember the name of
Willoughby.
it. Willoughby. That's exactly right.
That's right, it
Willoughby.
is.
That was that a buyer, an RL buyer? I think RL Byers,
Was it?
I think he started developing.
Willoughby and Lachlan Hill, city of Charlottesville neighborhood,
No, I'm
and
sorry, that
Albemarle
was
County
a Hauser.
neighborhood.
Hauser started that, I think, if I remember correctly. Yeah, I
You got it right. I was speaking Keith. I was like, he's got
visualized it.
He's
I
got
just
it.
was like,
It's crazy that I knew you knew
You guys
the
have
answer
got, like, nonverbal
by you
cues
saying,
going
I
on
know,
here.
this is so weird, this nonverbal.
What's so weird? I think it's a beautiful thing, Mr. Miller.
This is what just happened here. He said Huntley, and I knew he got the answer right. It was Willoughby. Oh, God. Damn it.
I love you too, brother.
Oh, same. So do you see any value gain in neighborhoods like that because their covenants and restrictions will preserve them from any collateral damage associated with upzoning? Or do you think that's a phenomenon that's not going to happen?
I mean, and this study's probably 20 years old at this point, but the last academic study that I'm aware of where they looked at PUDs planned unit developments and HOAs, there really isn't any added value to it.
There's a perceived added value.
There's a perception of it, but
Yeah.
it's not a real thing.
People like that. I'm showing
Protection.
I'm showing a house tomorrow to a client, virtually out of state, a move-up buyer. It's a highly contested piece of property. We'll probably end up putting an offer on it sight unseen, just to put it in perspective.
On a virtual tour
On a virtual tour.
with no home inspection,
Well, we haven't gotten that far yet.
with appraisal gap coverage.
We haven't
This is the peak of COVID all over again.
We talked about that.
This is COVID craziness all over again.
Yeah, we took a timeout. The end of what year is this? The end of 22, in the beginning of by the numbers in certain locations, the beginning of 23,
There was the sticker shock with rates
and we're now back to it.
that
because
froze the market for a little bit, but now the chaos is back.
But you're onto something, Jerry, and my belief that the upzoning, or what I'm calling it, the zoning rewrite, or actually what they're calling it is the zoning rewrite on that, is going to have less impact because, and I wrote a note for Friday's show because we're going to have Dave Norris and
Sean Cooper.
Thank you.
Yeah.
It's more speaking
Sean
Keith.
Cooper, yeah.
More speaking Keith in it. I wonder how many units or rooftops are actually in HOAs within the city of Charlottesville.
I think there's a lot.
Yeah, and that's
I think
actually
there's- I used to know this. I think there's 10 neighborhoods in the city of Charlottesville that are HOA.
so. If that's the case, those are specifically excluded from whatever change is going to be because
That's what I'm saying.
to Woody's point, the covenants and restrictions that are attached to those land override.
Supersede.
Well, it depends on, it depends a lot on how the HOA docs are written and so forth. But as a rule of thumb, they take precedent.
Yeah, and I wanted to go back to the intrinsic value of what an HOA is and is not. Keith, I'm sure you'll support this.
I support anything you say.
There are
Marcus.
folks in the market that absolutely love HOAs,
Yeah,
and
people that
they
hate
will
it.
always live in one. And then there are people who are just diametrically opposed to them. It's anti-American as far as they're concerned.
So it's interesting that this client I'm going to see tomorrow,
Mm-hmm.
that was, I've been doing this long enough. I don't write questions out. I just start asking questions as we're having conversations. And one of my front-loaded questions was, okay, so this is what we're looking for, yada, yada, yada. So how do you feel about HOAs? Oh, we don't care. We're great. Sometimes that conversation is I have no interest in it. And the reason I want to ask that, and these folks did not want to be in the city. They wanted a little bit more land, so we're outside of the
Well,
city.
I mean,
of
if someone's vehemently opposed to an HOA, that starts limiting some inventory.
That's
What they
exactly
can choose,
Yeah.
especially in Almo.
That's exactly why that conversation happens.
I mean, like, where are you going if you want a nice price point and you don't want an HOA in Almo?
That's exactly why I asked the question.
You're
It
going-
limits my search for
Some
them.
of those neighborhoods Ivy extended, right? You got some non-HOA neighborhoods that are nice price points, Ivy extended. Where else are you going?
So one of the great things about Zoom is you can do these meetings with people that are not sitting across the table. So I did it live. I said, okay, guys, this is what you want. I put in the criteria of what they wanted, and let's click no HOA and see what that looks like.
And what they have
And it went down to like single digit
of units available.
of the units available that fit their criteria that they wanted. Clicked on HOA, and it was substantially more. I can't remember the exact numbers. And they said, okay, great, then we'll find.
Yeah, they didn't care.
Their opposition to HOAs went away real fast.
Of course.
Went away real fast.
Well, that's good intel. That's good research you do there.
Yep. Well, doing the show makes me a little bit better.
A SWOT analysis almost.
There you go. This is exactly what it is.
That was a SWOT analysis.
Business school all over again.
Yeah. Real Talk with Keith Smith is getting technical today.
Strength, weaknesses, threats, and opportunities.
There you go. Opportunities, threats.
I got it.
Out of order, but you got it.
My dyslexia
kicked
kicked in. My dyslexia
We knew what
kicked
you meant.
More Keith. Look at that.
We knew what you meant.
Look at it. Even on this.
That's why people watch the show. What was the comment the other day?
Oh, yeah,
They
yeah.
come for the real estate, but they stay for the banter. What was the word that was used by the viewer listening?
Keith making a fool out of himself.
No. No.
Yeah. They come for the analysis and stay for
The conversation.
this.
The banner, yeah. It's a joy when experts, and Keith does a great job of getting experts on the show. This dude right here, Woody Fincham, is an expert. Fincham and Associates. As we wind down the show, how about a take for the viewers and listeners on what they may be able to expect for the remainder of the year?
Oh, wow. You always ask big questions, Jerry.
Especially the last one.
Yeah, this last one's always a big one. So, I mean, we're still tracking in a very positive environment as far as the market goes. We would have to see some major shift to change anything, or for me to change my opinion that we're going to have a positive spring and summer market. I think we're doing well.
So if you can give me a second to ask a question. So if Scott Morris is right, and we hit
Ross Mortgage, he's a loan officer.
If we hit 5% or either side of 5%,
Oh, that's a great question.
in your opinion, is that going to help inventory?
Great question.
Will it help inventory? No.
Oh, how about a broader question? In your opinion, is that good for the market?
It depends on what your perspective on good is. It's going to make everything a lot more expensive.
More competitive.
It's going to be extremely competitive. We're going to see a lot of consumers taking risks again. Appraisal gap coverage.
More than what they're doing now.
My God, I know, dude. What your daughter is doing is the scariest thing I've ever heard.
Oh, she's got a great advocate with her.
Thank God. Woody is a very.
Would you do me a favor? Would you grab one of those bottles over there? Because I have to start
I
drinking
want to
now.
emphasize this. Woody Fincham is such a kind person. He's
yeah.
constantly on this topic trying to diffuse the risk and make it seem not as dangerous as it actually is happening. But this is scary what your daughter is doing right here.
Well, that's why.
Sight unseen offer, living in Seattle, $75,000 appraisal gap coverage, has not walked the home, no home inspection, and is burning most of their cash position to buy this house.
And if you don't think I'm super excited about it, you don't know me.
What does Yona say?
Yeah. I'm the supervising broker.
I'd
That's
take
what
a
she says all
boatload
the
of
time.
risk, but that's a risk.
I wake up in the morning and she goes, "Remember, I'm the supervising broker."
What's the old adage? You got to pay to play.
Yeah, I totally get it. You're totally right, Woody.
But I've been talking about this on the show. This is when the pros show up.
Yeah.
Right? This is when Keith calls up Woody and thank you for what you've done for me
Sure.
on it and said, "Look, we're trying to make an offer on this property in Richmond. What do you think?"
Do you take a look at the foundation? Are there eyes on
Yeah,
what's
so-
under the roof?
Yeah, so I drive Yona nuts.
Yeah.
I'll walk to a house and pick it apart in 5 minutes.
Okay.
So it's really unfair for me because I've been doing this for 35 years. I can walk around a house.
I know that. You're a pro.
So the only thing that I could not determine on this house is up in the attic and in the crawl space because I couldn't get in it because I didn't have a ladder, which is funny. I told Yona I'm going to start keeping in the back of my truck now.
Just going to collapse them.
Yeah, they have the collapsible ones are great.
Like I've got them.
Okay.
But I just don't put them in my truck because that's not what you're supposed to do with the truck, right? You don't put tools in your truck, right?
But that could be one of the value propositions you offer. The realtor coming in with the ladder on their shoulder.
Sure.
Not only the lockbox entry, but a ladder
Is
as
Yona
well.
watching because
me see.
her risk management brain hair is like going, no.
Yona, you should make him get a ladder rack and put a full-size ladder on his truck.
I used to have a ladder.
I'm sure you
I've
did.
got rid of all that stuff, Woody. I don't want to do this anymore.
Now he wears a
No, I'm talking
button-down
about the
shirt.
show. I don't want to do this.
He wears a button-down shirt and a sports coat to work, not a tool belt and flannel anymore.
Yeah, Yona, what she wanted me to do the other day, she wanted me to fix something in the house. And I went, yeah. I said, aren't you a builder? I went, yeah, but
He fixed the door to the studio.
I only
and he goes,
play one on
Promise
television."
you'll never tell Yoda that I fixed the door to the studio.
she knows.
I know she knows.
She knows.
Oh, that's so funny. Woody, how can we find out more information on your business?
You can take a Google Woody Appraiser. We pop up. I think I'm the only one in the country with those two distinctions. And woodyfincham.com is our website. And also I have a blog at Valuation Nation on WordPress. So please check into that if you'd like to.
Or go to Real Talk with Keith Smith, pull down the partner tab, and there's a little thing you can click on it and get directly to Woody. And before we wrap up, you're still offering services for, like, if I want to have you come look at something before we put a contract in.
Absolutely,
on it.
as long as it's at the desktop, because I know you guys have got to fly. We this past week actually just were hired by a consumer who was unhappy with an appraisal report, which I have to say was horribly written.
What do you do then?
They asked us to do a review on it so they could go back to the lender and have it disqualified as an
Really?
appraisal. I mean, it was written by a fifth grader.
Does
Wow.
Can you do that? Does that have legs? Is that a possibility?
It depends on the underwriter. And, you know, if this
Who
is
reached out to you, the underwriter or the client?
consumer.
Oh,
The buyer.
The
The
buyer.
The
buyer.
borrower was upset with it because it was a very complex piece of land. They hired someone from further outside of the market that didn't. Every comp in the report had a different zoning.
Oof.
It was
So
a mess.
that's the downside. You know, the worst when we were pre-2008. You know, it was insane, and it went from one extreme to another, right? And that's because we've got personal experience with my son-in-law and my daughter up in Connecticut. There was $100,000 delta between the first appraiser and then the second appraiser. Same home,
Yeah.
within 2 weeks of each other.
Yeah, and the reality, there's three things going on. One doesn't know what they're doing. Two, the other one doesn't know what they're doing. Or three, neither one of them know what
So
they're
why are you
doing.
looking at me with saying nobody's doing?
What do you pitch? I'm going to steal that.
I'm going to look at Jerry.
Oh, that's
I was kind of
so
hoping
good.
to end on a high note.
Judah Wickower, props to him. Show
thank you,
archived at realtalkwithkeithsmith.com. It's a pleasure to do these programs. The I Love CVille show is up in approximately 56 minutes. So long, friends. Well done, boys. You'll tell us
Thank
when
you,
the
Woody.
mics are off. Woody, you're a pro. That was fun.
Yep.